It can be tricky to navigate the world of mutual funds and ETFs to find the investment that you were looking for. With over 9,000 mutual funds and over 1,700 ETFs to choose from in the US alone, it can be an overwhelming prospect to go through the pile and find the ones you're interested in. Luckily, the names that these funds go by are often organized in a way that they communicate important details about the fund, allowing investors to quickly understand what the fund invests in. This is particularly true for passive index funds, which are pretty straightforward in their naming convention. The Vanguard S&P 500 ETF, for example, obviously mimics the S&P 500. And the Spider S&P Retail Index Fund obviously follows the retail sector. Other funds, namely active funds, are a bit trickier to interpret. And unless you understand the key terms used by the industry, the PB Aggressive Blended INST ACC Mutual Fund may not mean a lot to you. So let's go over mutual fund and ETF nomenclature and how to interpret keywords in a fund's name on today's Plain Bagel. ETFs and mutual funds don't really follow any strict rules when it comes to naming conventions. Most of them start off with the name of the company that created the fund or the brand name of the fund series that it's a part of, like Spider or iShare ETFs. And if the fund tracks an index, sector, or country, that will be pretty clearly listed as well. But aside from that, it can be as simple as the Vanguard REIT ETF Index, or as complicated as the First Trust NASDAQ Clean Edge Smart Grid Infrastructure Index Fund. While there's no way to cover every possible keyword used in naming these funds, we'll go through a running example with the fictitious Plain Bagel Aggressive Small Cap Growth ACCA Mutual Fund to explain how we can learn some important points about a fund just from its name. Let's start off by determining what kind of investments are actually held in the fund. Sometimes this is pretty clearly spelled out, such as with the BMO US Equity Fund or with the TD Canadian Bond Fund. But with our example, we have the word aggressive in there. Not a very pleasant characteristic for our fund, but don't read too much into it. The term simply refers to the risk being taken on by the investments in the fund. Aggressive funds will put more investments into higher risk positions in an attempt to earn a higher return, whereas funds with the word conservative in their name will often have lower risk. These terms may also tell us a bit about the fund's equity and bond mix. Because equities are considered higher risk investments than bonds, aggressive funds tend to have a higher equity weighting, while conservative funds tend to be more fixed income. Funds may also be described as balanced, which, as you can probably guess, means that there's an even split between the two. All right, so just from the fund's name, we can already ascertain what it holds and even the degree of risks that it poses. But it's also important that we figure out the investment style, particularly for active funds. The first component of investment style is the size of the companies that the fund invests in. This is pretty easy to figure out. With our example, we see the term small cap, which means small market capitalization, which means small company, more or less. While mid-cap or large-cap funds would naturally invest in bigger companies. A company's size has a few implications for investors. Bigger companies are likely to enjoy economies of scale, but smaller companies may be more agile, with further potential to grow. So holding each type will expose you to different opportunities and different risks. Style may also be further defined in the fund's name with keywords like value, growth, or blend. In the case of a mutual fund with our example, we see the term that it's a growth fund. These terms provide some insight into the investment strategy taken on by the fund's manager. Value funds will typically invest in large, mature companies with strong fundamentals, with the objective of buying stock positions when they are cheap. This is where you'll find companies like Microsoft, Walmart, and JP Morgan Chase. And typically, you'll see more dividend-paying companies in this style. Growth funds, on the other hand, often invest in less mature companies. These companies may be more expensive on a stock basis, but they offer a lot of growth potential. This is where you would find your Canopy Growth, Tesla, and Amazon positions. Some funds are also described as blended, which, like a balanced fund, is a mix between the two styles. Now, the styles we discussed are pretty unique to equity funds. Bond funds will often use their name to explain the types of bonds that they invest in, with words like government, junk, investment grade, fixed rate, and floating rate to describe the bonds that they hold. But sometimes you may see the words long or short duration in a bond fund's name. Duration simply represents a fund's sensitivity to interest rate changes. So a higher duration or a long duration fund would be more impacted by changing interest rates than a short duration fund. So you can view duration as a measure of risk, though it is just one of the many factors that influence the risk of a bond position. Great, so we now have a pretty nice summary of what we're holding with our example mutual fund. But you'll notice that things get kind of weird at the end of the name, with the letters ACC and A. Codes like these are pretty common with mutual funds, though you won't often see them with ETFs. They provide very important details about the structure of the fund. The first code, ACC, stands for accumulation, though other funds will have the codes INC or DIS here instead, which stand for income and distribution respectively. This describes how the fund handles dividends and interest earned by its positions. Accumulation funds automatically reinvest dividends and interest back into its positions, which could be great for people looking to lower transaction costs, while income and distribution funds instead pay out the money to fund holders. Now, the second letter and final part of our mutual fund's name is the fund's series or class. This letter often gives a quick insight into the types of fees charged by a mutual fund. And you could have one mutual fund with multiple series. There are a lot of different things you could see here. The letters A, B, C, D, F, H, I, R, X, Y, and even the codes LW, ADV, and INST. I could spend a whole video explaining these codes, but here are the lowdown on the common ones. A, B, and C series funds are standard retail funds, which often charge some sort of sales charge when you buy or sell them, and they tend to be more expensive as they compensate advisors and brokers for selling you the fund. D stands for discount, and it's a cheaper fund you can get through self-directed brokers. So if you're picking and choosing your own funds without an advisor's help, these would be the ones you'd be more interested in purchasing. I, X, Y, and INST funds are only available to high net worth and institutional investors that meet certain investment criteria and minimums. And F and ADV funds can only be accessed through an advisor or fee-based account. I'll leave some links in the video's description which further detail the fund series and classes, but as you can see, there's a lot of important information conveyed by these single letters. But with that said, we can now interpret the name of our plain bagel aggressive small cap growth ACCA fund, which we now know is an equity heavy, small and growing company fund that reinvests dividends and charges a sales fee and a somewhat high MER. So just from the name, we have a nice summary of what we're buying when we purchase a unit of our plain bagel mutual fund. These keywords and codes are pretty common in the field of mutual funds and ETFs. But there are a few other terms sometimes tossed into the mix that are worth mentioning here as well. If you see the term hedged, for example, it typically means that the fund has eliminated to some extent the impact of currency fluctuations on your investments. So your Canadian equity fund won't see a direct impact from currency fluctuations seen by the Canadian dollar. The word core just means that the fund holds a complete portfolio that focuses on essential long-term positions, while select is sort of a buzzword for the best stocks, which arguably every mutual fund should include. A clean fund is one that pays no commissions to advisors or brokers, just the fees levied by your fund's manager. And finally, a target fund with a date in its name is a specially crafted fund for investors looking to exit or retire from their positions at the specified date. Who knew how detailed a fund's name could be? But the terms we've covered are really just the beginning. There are hundreds of other words that fund companies like to throw around in the industry. And there are plenty of other important details not included in the fund's name that you should research through a fund facts document. They're easy to find online, and it's worth the read before you buy and make a purchase. But when it comes to sorting through the immense pile of mutual funds and ETFs available, understanding these keywords can go a long way. Thanks for watching. Have you run into any oddly named mutual funds or ETFs or any other keywords? Let me know in the comments down below. If you like this video, make sure to like, subscribe, and hit the bell icon for notifications about future videos. For The Plain Bagel, my name is Richard Coffin. Thanks for joining me today.